Question 1. Which of the following is true regarding a common stock owner's rights? A. They have a guaranteed dividend payment. B. They have the right to vote for members of the board of directors. C. They have a priority claim on assets in the event of liquidation, before bondholders. D. They have the right to redeem their shares with the issuer at par value. Answer: B. They have the right to vote for members of the board of directors. Common stock ownership grants shareholders the right to vote on important corporate matters, including the election of the board of directors, who oversee the company's management. Unlike bondholders or preferred stockholders, common shareholders are considered the residual owners of the company and have the potential for capital appreciation and dividends, though dividends are not guaranteed and they have the lowest claim on assets in liquidation. Remember that common stock is about ownership and control through voting rights. Question 2. An investor seeking a low-risk investment with stable income and capital preservation would most likely consider which of the following? A. Common stock of a high-growth technology company. B. High-yield corporate bonds. C. U.S. Treasury bills. D. Options contracts on a volatile stock. Answer: C. U.S. Treasury bills. U.S. Treasury bills, often called T-bills, are short-term debt obligations issued by the U.S. government, widely considered to be among the safest investments due to the full faith and credit backing of the U.S. government. They are ideal for capital preservation and offer stable, albeit modest, income, making them suitable for investors prioritizing low risk and liquidity over high returns. In the world of investing, anything backed by the U.S. government is typically seen as the safest bet. Question 3. Under FINRA rules, a registered representative must complete the regulatory element of their continuing education within how many days of their second anniversary and every 3 years thereafter? A. 30 days. B. 60 days. C. 90 days. D. 120 days. Answer: D. 120 days. Registered representatives are required to complete the regulatory element of their continuing education within 120 days of their second anniversary of registration and every 3 years thereafter for as long as they remain registered. This mandatory training ensures that professionals remain current with FINRA rules and regulations, protecting both investors and the integrity of the financial markets. Think of the 120-day window as your critical deadline to stay compliant and maintain your registration. Question 4. All of the following are typically considered components of the bid-ask spread except A. The difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept. B. Compensation for the market maker for facilitating trades. C. The profit margin for the broker-dealer on a principal transaction. D. The commission charged by a broker for executing an agency transaction. Answer: D. The commission charged by a broker for executing an agency transaction. The bid-ask spread is the difference between the highest price a buyer is willing to pay, the bid, and the lowest price a seller is willing to accept, the ask. This spread represents the market maker's compensation for facilitating trades and providing liquidity, essentially their profit margin on principal transactions where they trade from their own inventory. A commission, however, is a separate fee charged by a broker for acting as an agent and executing a trade on behalf of a customer, not part of the spread itself. Question 5. An investor who sells a call option is said to be A. Long the call. B. Exercising the call. C. Short the call. D. Closing the call. Answer: C. Short the call. When an investor sells a call option, they are opening a new position, indicating they are short the call. Being short a call means the investor has an obligation to sell the underlying asset at the strike price if the option is exercised by the buyer. Remember, long means you bought something, and short means you sold something you don't necessarily own yet, establishing an obligation. Question 6. What is the primary role of a clearing firm in the securities industry? A. Underwriting new securities issues for corporations. B. Handling the confirmation, settlement, and delivery of securities transactions. C. Providing investment advice to retail clients. D. Regulating broker-dealers and exchanges. Answer: B. Handling the confirmation, settlement, and delivery of securities transactions. A clearing firm, often a large broker-dealer, plays a crucial role in the post-trade process by handling the back-office functions of trade execution, including confirmation, settlement, and delivery of securities and cash. They ensure that transactions are correctly recorded and that funds and securities change hands efficiently between buyer and seller. Think of a clearing firm as the essential plumbing system for financial trades, making sure everything is properly settled. Question 7. All of the following are types of investment companies except A. Open-end management companies. B. Unit investment trusts, UITs. C. Exchange-traded funds, ETFs. D. Hedge funds. Answer: D. Hedge funds. Hedge funds are typically structured as private investment partnerships and are not regulated as investment companies under the Investment Company Act of 1940, unlike open-end management companies, mutual funds, unit investment trusts, UITs, and closed-end management companies, which include ETFs. While they all manage money, hedge funds cater to sophisticated investors and employ more aggressive strategies, operating outside the strict framework of the Investment Company Act. Remember that the Investment Company Act of 1940 specifically defines and regulates various types of investment companies, but hedge funds fall outside this definition. Question 8. Which of the following risks is specifically associated with an investor's ability to sell an investment quickly at a fair market price? A. Interest rate risk. B. Liquidity risk. C. Inflation risk. D. Reinvestment risk. Answer: B. Liquidity risk. Liquidity risk refers to the potential difficulty or inability to sell an investment quickly without suffering a significant loss in value. Assets that are illiquid might require a substantial price reduction to find a buyer, impacting the investor's ability to access their capital when needed. For instance, real estate generally has higher liquidity risk than publicly traded stocks because it takes longer to sell. Question 9. An individual opens a brokerage account and names a trusted contact person. Which of the following is true regarding the trusted contact person? A. They are authorized to make trades on behalf of the account holder. B. They must be a family member of the account holder. C. They can be contacted by the firm to address concerns about potential financial exploitation. D. Their consent is required for all withdrawals from the account. Answer: C. They can be contacted by the firm to address concerns about potential financial exploitation. A trusted contact person is designated by an account holder to allow a broker-dealer to contact them if the firm has concerns about the account holder's mental or physical capacity and potential financial exploitation. This individual does not have authority over the account, such as making trades or approving withdrawals, nor do they need to be a family member. The primary purpose is to protect vulnerable investors by having an additional point of contact for verification and intervention if red flags arise. Question 10. A registered representative who has been accused of violating FINRA rules has the right to A. Immediately have their registration suspended indefinitely. B. An appeal to the U.S. Securities and Exchange Commission, SEC, only. C. A hearing and the opportunity to present a defense. D. Have all charges dismissed without investigation. Answer: C. A hearing and the opportunity to present a defense. If a registered representative is accused of violating FINRA rules, they have the right to due process, which includes a hearing before a FINRA panel and the opportunity to present their defense against the charges. This ensures fairness in the disciplinary process and allows the representative to explain their actions or contest the allegations. Due process is a fundamental right in any disciplinary action. Question 11. Which of the following statements is true regarding a corporate bond's yield to maturity, YTM, compared to its coupon rate? A. If the bond is selling at a discount, the YTM will be lower than the coupon rate. B. If the bond is selling at a premium, the YTM will be higher than the coupon rate. C. If the bond is selling at par, the YTM will be equal to the coupon rate. D. The YTM is always higher than the coupon rate. Answer: C. If the bond is selling at par, the YTM will be equal to the coupon rate. When a bond is selling at its par value, face value, its yield to maturity, YTM, is equal to its coupon rate because the investor is receiving only the stated interest payments without any capital gain or loss at maturity. If a bond sells at a discount, its YTM will be higher than the coupon rate, and if it sells at a premium, its YTM will be lower than the coupon rate. Remember this inverse relationship: premium means lower yield, discount means higher yield relative to the coupon. Question 12. Which federal act established the Securities and Exchange Commission, SEC? A. Securities Act of 1933. B. Securities Exchange Act of 1934. C. Investment Company Act of 1940. D. Securities Investor Protection Act of 1970. Answer: B. Securities Exchange Act of 1934. The Securities Exchange Act of 1934 created the Securities and Exchange Commission, SEC, and granted it the authority to regulate the securities industry, including exchanges, brokers, and dealers. This act also addresses secondary market trading, insider trading, and the registration of broker-dealers. Think of the 1934 Act as the foundational law that established the main federal regulator for the ongoing oversight of securities markets. Question 13. An initial public offering, IPO, would be considered a transaction in the A. Secondary market. B. Third market. C. Primary market. D. Fourth market. Answer: C. Primary market. An initial public offering, IPO, occurs when a company sells its stock to the public for the first time, which is a transaction conducted in the primary market. The primary market is where new securities are issued by corporations and governments to raise capital. Once these securities are sold in the primary market, they then trade among investors in the secondary market. Question 14. Which of the following is typically exempt from registration under the Securities Act of 1933? A. Common stock issued by a publicly traded corporation. B. Corporate bonds issued by a large industrial company. C. U.S. government securities. D. Options contracts listed on an exchange. Answer: C. U.S. government securities. Securities issued by the U.S. government and its agencies, as well as municipal bonds, are typically exempt from the registration requirements of the Securities Act of 1933. This exemption simplifies the issuance process for these entities, as the government's creditworthiness is considered sufficient protection for investors. Most corporate securities, by contrast, must undergo a rigorous registration process with the SEC before being offered to the public. Question 15. The term business cycle refers to the A. Annual reporting period for a corporation. B. Fluctuation of economic activity over time, characterized by expansion and contraction. C. Process of a startup company becoming publicly traded. D. Life cycle of a product from introduction to decline. Answer: B. Fluctuation of economic activity over time, characterized by expansion and contraction. The business cycle describes the natural upward and downward movements in a nation's gross domestic product, GDP, over time, characterized by four main phases: expansion, growth, peak, highest point, contraction, recession, and trough, lowest point. Understanding the business cycle helps investors anticipate economic conditions and make informed decisions about their portfolios. Keep in mind that the economy rarely moves in a straight line, it's always cycling through these periods. Question 16. A market order is an order to A. Buy or sell a security at a specific price or better. B. Buy or sell a security immediately at the best available current price. C. Buy or sell a security only when it reaches a certain price, becoming a market order thereafter. D. Buy or sell a security at the end of the trading day. Answer: B. Buy or sell a security immediately at the best available current price. A market order is the most basic type of order, instructing a broker to buy or sell a security immediately at the best available price in the market. It prioritizes execution over price, meaning it will be filled without delay, but the exact price may vary. Think of a market order as a "get it done now" command for your trade. Question 17. The department of a broker-dealer responsible for assisting issuers in raising capital by underwriting and distributing new securities is known as A. Operations. B. Research. C. Investment banking. D. Retail sales. Answer: C. Investment banking. The investment banking department of a broker-dealer specializes in assisting corporations and governments with raising capital through the issuance of new securities, a process known as underwriting. They also advise on mergers, acquisitions, and other corporate finance activities. This department acts as the bridge between companies needing capital and investors willing to provide it. Question 18. All of the following are characteristics of preferred stock except A. Fixed dividend payments. B. Priority claim on assets in liquidation over common stock. C. Voting rights. D. No maturity date. Answer: C. Voting rights. Preferred stock typically does not carry voting rights, which is a key distinguishing feature from common stock. Preferred shareholders usually receive fixed dividend payments, have a priority claim over common stockholders in the event of liquidation, and their shares generally have no maturity date, similar to common stock. Remember, preferred stock is more about income and safety of principal than about control or growth potential. Question 19. An individual who provides investment advice for a fee but does not manage client assets or execute trades for clients would most likely register as A. Broker-dealer. B. Investment advisor. C. Agent of a broker-dealer. D. Issuer. Answer: B. Investment advisor. An investment advisor, IA, is a person or firm that provides advice about securities for compensation. While they don't necessarily execute trades or manage assets, giving advice for a fee requires registration, typically with the SEC or state securities authorities. Broker-dealers, on the other hand, are in the business of buying and selling securities, and agents are individuals who represent broker-dealers in effecting securities transactions. Question 20. Which of the following actions by the Federal Reserve would be considered a loose monetary policy aimed at stimulating the economy? A. Increasing the federal funds rate. B. Selling U.S. government securities in the open market. C. Lowering the reserve requirement for banks. D. Raising the discount rate. Answer: C. Lowering the reserve requirement for banks. Lowering the reserve requirement means banks are required to hold less money in reserve, freeing up more funds for lending to consumers and businesses. This increases the money supply, encourages borrowing and spending, and stimulates economic growth, which is characteristic of a loose monetary policy. The Federal Reserve uses tools like the reserve requirement, federal funds rate, and discount rate to influence the economy. Question 21. Which of the following is not a characteristic of a municipal bond? A. Issued by state or local governments. B. Interest earned is generally tax-exempt at the federal level. C. Generally riskier than corporate bonds. D. Used to finance public projects. Answer: C. Generally riskier than corporate bonds. Municipal bonds, often referred to as munis, are debt securities issued by state and local governments to finance public projects like schools and roads. While not entirely risk-free, they are generally considered less risky than corporate bonds because they are backed by the taxing authority or revenues of the issuing municipality, and their interest is typically exempt from federal income tax, and often state and local taxes for residents of the issuing state. Question 22. Which of the following is the primary purpose of the Securities Investor Protection Corporation, SIPC? A. To regulate the stock exchanges and broker-dealers. B. To protect customers against losses due to broker-dealer failure. C. To provide investment advice to the general public. D. To ensure bank deposits. Answer: B. To protect customers against losses due to broker-dealer failure. The Securities Investor Protection Corporation, SIPC, is a non-profit corporation created by Congress to protect customers of brokerage firms from financial loss in the event a SIPC member firm fails. SIPC covers customer accounts up to $500,000, including a maximum of $250,000 in cash, when a broker-dealer goes bankrupt, but it does not protect against market losses. Think of SIPC as insurance for your brokerage account, specifically against the firm's collapse. Question 23. An individual looking to invest in a diversified portfolio of stocks and bonds, managed professionally, with readily marketable shares and the ability to redeem them at net asset value, NAV, at any time, would most likely invest in A. Closed-end fund. B. Exchange-traded fund, ETF. C. Mutual fund. D. Unit Investment Trust, UIT. Answer: C. Mutual fund. A mutual fund, or open-end management company, is a type of investment company that issues new shares continuously and stands ready to redeem existing shares at the current net asset value, NAV, at the end of each trading day. This structure provides professional management, diversification, and high liquidity, making it suitable for investors seeking convenience and flexibility in their investments. Keep in mind that mutual funds are bought and sold directly from the fund company, unlike ETFs or closed-end funds which trade on exchanges. Question 24. What is the primary advantage of a Roth IRA over a traditional IRA for an individual who expects to be in a higher tax bracket during retirement? A. Contributions are tax-deductible. B. Withdrawals in retirement are tax-free. C. There are no income limitations for contributions. D. Required minimum distributions, RMDs, begin at age 73. Answer: B. Withdrawals in retirement are tax-free. The primary advantage of a Roth IRA for someone expecting to be in a higher tax bracket in retirement is that qualified withdrawals in retirement are entirely tax-free. Contributions to a Roth IRA are made with after-tax dollars, meaning no upfront tax deduction, but this trade-off is often beneficial if you anticipate higher future tax rates. It's like paying your taxes now to enjoy tax-free income later. Question 25. Which of the following best describes the role of a transfer agent? A. Handles the issuance, cancellation, and reissuance of stock certificates and maintains the ownership register. B. Advises the issuer on the structure and timing of a new securities offering. C. Provides research and recommendations on securities to institutional clients. D. Acts as a custodian for client assets, holding them in safekeeping. Answer: A. Handles the issuance, cancellation, and reissuance of stock certificates and maintains the ownership register. A transfer agent's primary role is to ensure accurate records of stock and bond ownership, handle the issuance and cancellation of certificates, and process shareholder mailings, such as proxies and dividends. They are responsible for keeping the issuer's register of shareholders up to date. Think of the transfer agent as the official record keeper for who owns what shares of a company's stock.